There are several stocks reporting earnings this week. I have narrowed down the list to 4 that I believe are interesting. 2 of them are actually buys right now. One of them isn't that far off, and one of them is off a little bit. But nobody knows what could happen after earnings. And so if there's some kind of pullback after earnings, then these companies could easily move into a deeper buy territory. That's why I'm watching these stocks this week. So let's go ahead and get right into it. The first stock that I'm watching this week is Leggett and Platt, ticker LEG. Leggett and Platt reports earnings after market close on Monday, which depending on when you watch this video, the company may have already reported its earnings. My target buy price, and this is a absolute no-brainer buy price, would be $35.56 per share. At that price, the stock pays a 4.5% dividend yield. It's currently paying a 3.7% dividend yield. Back in December, I put together a video on what I was doing with Leggett and Platt at the time. So I was able to boost my yield to 11.4%. If you are interested in how to boost your income on stocks like this, then I'm gonna put a link in the description below to the video that I put together on Leggett and Platt. All right, so quite simply, this is why I say that this stock is a no-brainer on a pullback to $35.56. So we can see over the past 10 years, whenever the stock's dividend yield has climbed to or risen above this line, above 4.5%, it has proven to be a good buying opportunity. Because the stock's price and yield work inversely with each other, when the stock's price falls, the dividend yield shoots up, and that's exactly what happened here. The stock just absolutely plummeted. It put it in a buy territory. This yield climbed above 4.5%, and this was a fantastic buying opportunity. So in order for Leggett and Platt's yield to shoot up to 4.5%, the stock would have to fall to $35.56. So now the question is it reasonable to expect a stock like Leggett and Platt to fall 19% around earnings? And to help us answer that question, let's just look at what it has done recently after earnings. So this table goes back to 2018. In this column, we're able to see what is the stock's price one day before it reports earnings and what is the stock's price one day after it reports earnings. And then this is the exciting column. This is what shows the difference, or the potential upside or downside from the stock after earnings. And we can see this last quarter, it barely did anything. It was really boring. It reported earnings. There was no reaction to it. The quarter before that though, it dropped 5%. The quarter before that, it dropped 10%, and that might have been a good buying opportunity. All I want to point out is that this is why this stock is on my watch list, because if it has some kind of crazy reaction after earnings and it is able to drop to the price point that would get me a 4.5% yield, then I'm going to jump on it and I'm just going to load up on the stock. All right, stock number 2 to watch this week is Cisco Systems, ticker CSCO. Cisco reports earnings after market close on Tuesday, February 9th. Back in November, I had pegged its fair value at $45.84. At recent prices, that indicates that it's still slightly undervalued, about 5%. My no-brainer buy price is $36 per share, or a 4% yield. We had that opportunity. Back when I put together this video, I had noticed that the stock's price had fallen down to $35.90 and its yield had shot up to pretty much 4%. And I told you guys what I was doing with this. I ended up putting about $37,000 into this stock. So here's our target yield, you guys, 4%. This line goes all the way across. We had an opportunity back when everything else fell in March of 2020. And then just a few months ago, when I made the video on Cisco and showed you guys what I was doing, we had another buying opportunity. It's still slightly undervalued at current prices. And so if you don't own Cisco already, and if you're thinking about buying it, then now is still a decent time. I think you'll do decent over the long term by buying it at today's prices. I'm just saying, if it drops close to the point where it starts paying a 4% yield, it is a no-brainer, and that's when I'll be backing up the truck again. All right, let's just look really quick. How has Cisco reacted historically after earnings? And again, this is the price one day before earnings, one day after, and this is the column that stuff starts to look exciting. You can see that there has been some volatility. So a couple quarters ago, it dropped almost 10% after earnings. You don't really want to try to time this stuff, and that's not at all what I'm talking about. I'm not talking about trying to time earnings. I'm just saying these are on my watch list because I'm watching for opportunities for a stock that I want to buy more of, or that I want to get into in the first place, to pull back so I can buy it at an ideal target buy price. Stock number 3 to watch this week is Duke Energy, ticker DUK. Duke reports earnings before the market opens on Thursday, and several months ago, Jason Fieber on this channel, he did an in-depth analysis of Duke Energy, and in his analysis, he came to the conclusion that the stock was really worth about $88.87 per share. At the time Jason did his video, the stock was undervalued. Of course, since then, the stock has climbed, and it's no longer the deal that it was when Jason first covered this. It's trading at $94 per share right now, which would indicate it's about 6% overvalued. And so why we're watching it this week is because the company's reporting earnings, and who knows, maybe after earnings, the stock pulls back into fair value territory. So how has Duke reacted after earnings recently? And we can see that there has been some volatility, but really there's not that much. You could consider selling a covered put option on Duke, and you'll get paid today. You'll get paid upfront for the opportunity to buy Duke for less than the estimated fair value. And here's how that could work. As I'm recording this video, the July 16th, 2021 put options on Duke, the $87.50 strike price, are going for over $3 per share. So what this means is you could get paid over $300 today for the opportunity to buy Duke at a price that is less than what its estimated fair value is. And so here's how that would work. You would sell to open one July 16th, 2021 $87.50 strike price put option for over $3 per share, so you'd get $300+ if the stock ends up trading below $87.50 between now and expiration, which is July 16th, then you're gonna buy it at $87.50, and you were paid over $300 to buy it at $87.50. And if you consider this income, that would actually reduce your cost basis to below $84.50. Now, the one thing about doing something like this is that you need a lot of money up front to do it, because you're potentially obligated to buy 100 shares of Duke at $87.50. You would have to have $8,750 in your account to even put into this trade. I sell put options like this all the time to get paid to buy my favorite stocks for less than what they're trading for. If this is something that you've never really heard of before or you've never considered and you want to learn more about it, I'm going to put a link to one of my videos below on how I sell put options. And this is something that you could do as well. You don't have to do it just on Duke Energy. You can do it on any stock out there that has options. Okay, and last but not least, stock number 4 to watch this week is Digital Realty Trust, ticker DLR. DLR reports its earnings after market close on Thursday. Jason just covered this stock a couple weeks ago. I'm gonna put a link to his video in the description below. He just did an in-depth analysis on DLR and talking about the opportunity that we have with it right now. He came up with an estimated fair value of $151.60. That means that it's still undervalued because the stock is currently around $145. So if you're interested in buying this stock, then something you may want to consider doing is maybe get half of your position now. If you're going to invest, for example, a total of $5,000 in Digital Realty, then maybe put $2,500 into the stock now while it's a little bit undervalued, and then wait until after earnings. And if the stock comes down after earnings, then go ahead and get the rest of your position. And then you'll have a full position and you would have averaged down a little bit. All of that said, let's just take a quick look and see how has DLR performed recently after reporting earnings. And we can see pretty much it hasn't been that volatile, except, whoa, look at this one, you guys. 8% it pulled back. This is back in October 2018. Again, we're just watching this. We're not making any predictions. You can't predict which way the stock is gonna move. And all I'm trying to say is these are stocks that I am watching. So I'm not saying that they're gonna move up. I'm not saying they're gonna move down. I'm not saying they're making any kind of big move. It may not do anything. All I'm saying is these stocks are reporting earnings this week, and so they have the potential to move into our buying territory. That's all I've got for today, guys. Thank you for sticking around until the end. If you got any value out of this video, please give it a thumbs up. If you're not already subscribed to the channel, but you like this kind of content, please consider subscribing to the channel. If you want to get an alert the next time one of us posts a video to the channel, then be sure to tap or click on the notification bell, and YouTube should let you know.